Welcome to my YouTube channel. Today I am going to take you through the company corner. A new company which I am going to discuss is Divis Lab. Divis Lab is one of the very important pharmaceutical company in the world. It is primarily in the area of APIs, and majority of its revenue comes from export. It has been an investor's darling for many years, but last almost year and a half it has been stagnating. So let us look at this stock in details in company corner and try understanding what steps we need to take for this stake going forward. So let's move forward. As I mentioned to you, when you look at the parameters, the sales has been growing at the rate of 22% for last 3 years and 17% for last 5 years. Similarly, profit has grown more than 20% in both the time period, 3 years and 5 years. It's a zero debt company and ROE is hopping 28.2%. Similarly, the company has been generating free cash flows consistently. So based on all the parameters, it is a good stock, it's a portfolio stock, and therefore we have been having this in our portfolio for a long time. So what we'll do is we'll go back to the details and look into it, why this stock is not performing the way it should. So looking back, if you look at the EPS growth, EPS has grown in last 10 years from 18 to about 110 or so. So it's a fantastic growth of EPS, and as you can see here, last 1 year it is sort of stagnating. And similarly, OPM is under control about 40%. It has been higher than 40% in the previous year, but current year it is about 40%. So OPM is in a range hovering between 36 to 40%. And similarly, sales has multiplied more than 5 times in last 10 years. Now, when you look at the cash flows, so as I mentioned to you, this company has been generating free cash flow consistently, except 1 year it is minus, otherwise it has been generating cash flow regularly. So EPS growth is stagnating, and this is primarily due to because they have around almost 70% export to US and European countries. Coming back to the ratios, when you look at debtor days, it is sort of in the same range, like not much variation. Similarly, when you or cash conversion cycle is quite high here, but even here this is not abnormal. It is in line with their historical cash conversion cycle. So ROCE, as I mentioned to you, is 35%. This is one of the highest ROCE historically. So on these parameters, the company is sort of behaving in the range itself. But you look at the peers like Divis Lab, the Lupin, the Gland Pharma, Granules, Jubilant, Hickel, and Aarti Drugs. The other company may not be producing API, but they are also in generics basically. So from that perspective, they have been put as a competition. So you look at their PE, this company is not very high at PE at this point of time. So maybe because about 2 years back, the PE used to rule very high in the range of about 45, 50. So this could be a case of PE correction as well. So, but at this point in time, at this particular PE, it appears in line with the peers. When you look at ROCE, it is highest in the industry. Similarly, ROE is 28.18, highest in industry. OPM, operational profit margin or operating profit margin, is 40%, and NPM is 33%, once again highest. In terms of sales growth and profit growth and sales for 3 years and 5 years, this company is second highest in this comparison. Highest being the Gland Pharma. So relatively, the stock is priced reasonably or is competitive now to make an entry if somebody has got a long-term perspective, as it appears from this pricing. When you look at the historical performance, as you can see here, it has given a fantastic return in last 10 years or so. But last year and a half, it has been sort of like in a downtrend, or now it is sort of consolidating at about 3,200 type of 3,300 type of range. But this particular number is lower than both 200 days and 50 days moving average, which suggests if you go purely with moving average, this could be safer to enter into this stock. When you compare this stock on valuation wise, then you will find a very interesting case here. So let me take you through the valuation wise. The 5 years, if you look at 5 years trend and look at P ratio, 5 years median P is 45, where it is available at less than 29. Similarly, 3 years median P is 50. It is much below 3 years median P, and 1 years also median P is about 29. So looks like there's a P correction situation. Similarly, but on all three parameters, 5 years, 3 years and 1 year, P is quite good. So if somebody had gone through P, he should not have bought at 45 and 50 type of P, which I have done in past. And therefore, today my investment in Divis is at negative. Although I did make some profit in past, but as of today, it is showing little negative. So when you go at price to book comparison, again for 5 years it is lower than the median. 3 years again it is lower than the median. 1 year it is again lower than the median. So on all these parameters, both P and PB in 5 years, 3 years, 1 year is low. Last peak was 53.72. Today is 33.35. So it is almost 38% lower than the peak. So looking at both, it suggests a good sort of situation in this stock. Going back and looking at the brokers' research, brokers are mixed in terms of out of 6 I have considered here, 3 are suggesting buy and 3 are suggesting either neutral or hold. So this is certainly not a sell at this price, that is for sure. Now somebody who is very gung-ho about, because this sector has not performed for a while, and any sector which has not been performing, it comes in rotation. Looking at that, and also from the mixed recommendation, it could be a good point to make an entry into this stock. Promoter holding is about 52%, and even DII and FII, if you look at, they hold substantial share, about 30-35% in the company, which is very high. And these guys are much educated, they are much researched compared to people like us. So why then this stock, or pharma in general and this stock in particular, not performing? For this stock, management very optimistic about 22, 23 and 23, 24 performance. If you go through their recordings, their control recordings, you can see that custom synthesis business, they expect to do much better in years to come. 68% export is coming from US and Europe. And as you know, US and Europe is going through economic downturn. But generally in pharma, even in downturn, people buy. And what I can see here, that since it is the API supplier and generics, normally this API will be used. So I think this may not be impacted so much due to impending recession, which you can see in these countries. And therefore, when you just sum up all the analysis so far, rising indicators, CPS, sustained OPM and rising sales, predominantly an export company, and that is a sort of advantage at some time and problem at some time. 85% of revenue comes from export. And these guys have presence in 70 odd countries. Out of the 85%, 70% is from US and Europe, which I discussed earlier. In the last 3 years, sales has been up by 1.56%, and net profit also went up almost double. So in last 3 years, sales went up by 1.56 times and profit almost double. Good bet at given price for 3 to 5 years perspective. So friends, Divis Lab, a very blue chip company from pharma space, has been a darling of investors in past years. But last 1.5 years, it has not been doing well, and pharma also has not been doing well. Looking at the recommendation and company performance, the phase or the pressure or headwinds which this company is facing appears temporary. Therefore, I personally feel that at this price, if you are holding it, please continue holding, and one can add also at this price. But before I end, I like to communicate to you that investment in stock is a risky affairs. Before investing, consult your investment advisor or do your own research. The purpose of this video is purely educational. So I think, friends, you can do a further research on this and then take a call. So if you like this video, please don't forget forwarding it to your group using different social media platforms like WhatsApp and Facebook and LinkedIn or maybe Twitter. And if you are not subscribed to the channel, please do so that we can be a participant in the platform and exchange our ideas regularly. Thank you so much for your time and see you next time.